can enable efficiencies for cross-border payments. International payments incur significant cost as they move through the corresponding banking network.
777, dude.
That,
I love
we
this.
have enabled US customers of our Zoom product to fund millions of dollars of remittances with PYUSD at a lower cost. When a Zoom user chooses PYUSD as a funding instrument, there are no Zoom transfer fees that are incurred. In addition, on the wholesale side, we have enabled several of our disbursement partners to settle directly with us using PYUSD on the back end of transactions, reducing cost and increasing the velocity of those settlements. At every stage of our cryptocurrency journey, beginning with our buy wholesale product, the launch of crypto transfers, and the go-to-market of a stablecoin, we have been deliberate and methodical in our approach, building trust with customers, regulators, and law enforcement at each step. In terms of policy, we believe that predictable market policy is necessary for the crypto industry to grow and thrive in the United States. We recommend several policies that can help make the US a leader in this technology. First, we urge Congress to pass legislation providing stablecoin and markets and trading frameworks for the industry. Second, a state pathway is critical for the continued growth of the industry. State licensing is the approach that most crypto companies have taken, and it leverages the expertise developed over the years by the State of New York Department of Financial Services and others. Third, federal and state charters can work simultaneously under a core set of standards. In both state and federal regimes, the requirements for reserve, asset management, governance, disclosures, and prudential risk management should be fit for the purpose of payments. Finally, any legislation must recognize that the business of payment stablecoin issuance is the business of payments and is not the business of banking, and that payment stablecoins are not securities. In conclusion, the current environment offers an important moment for the US to benefit from a thoughtful and proportionate legislative approach. We look forward to working with you to complete this important task. Thank you.
Thank you. Mr. Masid, you are now recognized for 5 minutes.
Chairman Stile, Ranking Member Lynch, Committee Ranking Member Waters, members of the subcommittee and
Mr.
staff.
Masid, if you could just double check your mic is on. We can hear you, but the live feed may not pick you up.
Is it okay now? Okay. I'm honored to testify before you today. The views I express are my own and do not represent the views of the Harvard Kennedy School. You know, it was in 2014, under my leadership, that the CFTC declared Bitcoin a commodity, and since that time, for over 10 years, I've been calling for strengthening regulation. We hear a lot of calls for clarity, and everybody can be for that, but you know, you can have bad rules that have clarity. We need a regulatory framework that truly encourages responsible development of this technology and not just more of the speculative activity and the abuses that we've seen far too much of to date. I'm going to focus on stablecoins. It's the most useful application of the technology to date, and I applaud the committee for prioritizing that. The Stable Act has many features I support, such as full reserves for tokens, limitations on the activities of an issuer, but there are many areas where it is deficient, and it is substantially weaker than what was negotiated between the former committee chair and the ranking member last fall, which the ranking member introduced yesterday. I want to highlight 5 issues. These are discussed, as well as others, in more detail in my testimony. First, the legislation provides for federal and state chartering, but there is far too much risk of weak state standards and an inadequate review process, and there is no ongoing federal supervision of state issuers. That's a prescription for a mess. We want people to have confidence that any stable coin is truly stable and worth $1, regardless of what state it comes from. We don't want to provide insurance for that, as we do with bank deposits, so we have to do it through sufficient national standards and supervision.
You had a great quote that said, rest at the end,
Secondly,
not in the middle.
The legislation does not address the bankruptcy of the stablecoin issuer. If an issuer fails, the standard corporate bankruptcy process would likely apply. That means you've got the automatic stay, holders will not get their money quickly, and the process could take years. And there could be contagion and significant collateral damage. The legislation needs to create a dedicated resolution process that minimizes those risks. Third, I don't think it does enough to address the risks of financial crime and evasion of sanctions. It says issuers are subject to the Bank Secrecy Act. That's a good thing. But the BSA relies on centralized intermediaries. Stablecoins can be transferred and traded without going through a centralized intermediary, and they can be transferred through an intermediary that doesn't even comply with the BSA. So we need to extend the regulatory perimeter and be more creative in tackling these risks. Fourth, the act is a bit like putting the lock on the barn door after the horses have left when you think about the market today, because it's not clear to me it would even have much impact on Tether. The legislation says it's unlawful to issue a stablecoin that isn't chartered, but there's no enforcement mechanism for that and no penalties. It needs to have those and an explicit territoriality provision. And finally, there are simply many ways the Act doesn't give regulators enough authority and discretion, given that this could become a very significant market and it will evolve in ways we can't predict. I want to turn from stablecoins and briefly discuss decentralization and market structure. I'm pleased to see the subcommittee propose that the SEC and the CFTC work together on these issues. I've recommended joint approaches for years now. The challenge